Trader PhD's Commodity Chat podcast series, bringing you the latest trends in U.S. and global commodity markets, from grain prices to livestock trends, exports to weather impacts. We cover what matters most to your operation. Let's dive in.
Good afternoon, everybody. Nick and Dawson here with another Commodity Chat. Today we had the firework creating, momentum busting, life altering quarterly grains and plantings report. Dawson, did it live up to the hype in your opinion?
Short answer, no. But long answer, looking back at some things that are like a lot of the changes that we've seen in previous June reports. I mean, this is supposed to be the big kahuna of the year that just kind of sparks a little bit more of a market reaction. Specifically looking at corn the last few years, it's not really uncommon to see a couple percent changes, whether it be up or down. The last 3 years, it was a large percent change to the downside. You kind of look at this year, though, especially on corn, soybeans, they all chopped around quite a bit post-report, but in terms of, where we ended, just not a big change.
Not really. I'll go out on a limb and say as far as trade action is concerned, it was, relatively boring, benign, whatever you want to call it. Obviously you had some mildly erratic trade, both sides up and down, but really, didn't really show a definitive move either way. And it makes me, obviously tomorrow, you know, let it trade tomorrow and you'll get a little bit better answer. But if you're looking at just these two reports coupled with weather, you got to wonder if we're just resume trend.
Yeah, I mean, you look at the acreage report, there wasn't really a lot of big changes that the USDA came out with. The trade averages, especially, again, weren't expecting a big change. And when you look at what the USDA came out with, sometimes they like to throw a curveball in there, but they lowered their corn and bean acres, and despite being lower than expectations, one could say you were still within the trade average. Wheat came in a little higher than expected and higher than the March report, but really in terms of, trying to get something that was going to be a little bit change of status quo, the acres report itself just didn't provide that. So, I mean, you almost have to look at the quarterly grain stocks this time around to really dig into, is there anything that's, again, to the life altering thing that you segued us into?
Yeah. Yeah, no, I mean, I agree with that. The stocks, if there was, I guess, a surprise or something to glare at, it would have been pretty much all the grains coming in a little bit heavier on stocks than the market anticipated. And then obviously, the biggest one there being beans. I don't know. What do you think there?
Yeah, I mean, soybeans, like you said, probably definitely the bigger shocker because, the USDA was, or pre-report Bloomberg's analyst survey was really predicting almost no change to that soybean grain stocks estimate. So I don't know if it's whether your pre-report expectations are expecting something to be unchanged, that's where you kind of get that larger surprise. And so, pre-report leading up to it, just the last 5 minutes, 10 minutes or so, we were up about double digits for some of those soybean contracts. And then it just gave it all back when those June 1 stocks came in higher than expected. We're up about 4% year over year with those soybean numbers. And that's despite a reduction coming from the producer side of things. So we did see quite a bit of bushel shift from the producer to the commercial side, but then they just kind of stuck there. And I think that has a lot to do with kind of the minute export demand that we've seen, namely with, China not buying as much. We're still trying to get some exports going with different buyers that may not be as traditional. But yeah, those stocks could just kind of hung out there, and that's what gave us those higher than expected numbers.
Speaking of bear stocks, and then I kind of touch on this and move on if you want, but boy, that wheat numbers, it's been something me and you have been talking about since the beginning of the year, up 20 some percent year over year, 30 some percent on farm, 19% off farm. Producers had a tight grip on that physical grain, man. And again, we've identified it's hard for a market to rally if that's the case, and hopefully those physical bushels get cleaned up. But do you have any thoughts on that weed, or do you want to talk weather?
I mean, just that quick note on wheat, you mentioned that, yeah, 22% increase was what we got on total all position stocks. You came in with stocks that were higher for on farm, higher for off farm. So I mean, you're looking at a lot of bushels that are just sitting there. Some of those did get moved as they typically get whittled down in a given year, but historically, the producer is still holding a higher percentage of those wheat stocks compared to what they usually do. And I mean, it just seems like those bushels that even are getting moved, you know, are still kind of just sitting there, whether you want to talk about lower demand, whether you want to talk about higher wheat imports too, because that I think has a little bit to do with it too. We're importing a lot more cheaper supplies that's leaving more competition for our domestic supplies to get moved around. And so that's kind of just something to think about too, as it's been the bearish factor a lot for the wheat market is just these high stocks.
Yeah, man. Free markets are a, a funny thing, right? They if you can make some money, importing a product, even though we have plenty of it here, I guess that's what you'll do. Um, Weather, uh, we've got a weather pattern this summer that seems to be um, relatively adequate for moisture. Um, that pattern doesn't really seem to be changing quite yet. I mean, obviously, there's some ideas that it could, um, but it hasn't really shown that much. Yeah, I do think, for right now, the continuation of keeping most production areas supplied with moisture seems like the path that we're on. What else are you seeing out there on weather,
Yeah,
Mike?
I talk to Eric Snodgrass almost every week that we try to give our producers, our listeners, a little bit of an idea of what he's thinking about weather. We put a lot of trust in him to kind of know what's going on, especially even when he's wrong, because he comes back and kind of tells us why he's wrong. So he's very, very good about admitting that. And so that's why, he kind of becomes a little bit more of a trusted source. And so, a lot of what he's been seeing, yes, for the near term, we're probably going to see a continuation of some good scattered showers across major growing areas, kind of getting where they need to be. Our moisture conditions are sitting fairly well for a lot of places. There are some pockets. I mean, that's also was the theme of this week's video, is that there are some pockets experiencing less than ideal conditions.
But you're always gonna have that.
Yeah, you're always going to have that. You
Always
always
gonna have
feel bad for the producer that's, some producers are okay with having more bushels if we have a down market. But then those producers that have less bushels to sell, even in a down market, that always sucks. But, we're still continuing to see that kind of continue of, there's only going to be a few pockets that aren't really ideal. What was interesting though, kind of looking at the July outlook. I mean, we care a lot about the July outlook, and you know what, it's here. So I mean, we're going to really care about that now. And so what Eric was kind of showing this week is that there are some drought risks, namely because we have a little bit of some momentum slowing going on in the atmosphere. So, I mean, if typically for this time of the year, from what he's identified, is that could lead to some drier conditions. If we're hot, that can lead to a continuation of hot conditions. And so you get a lot of evaporation rates for crops that, are probably already sitting in some decent moisture conditions here too. So, I mean, there are some drought risks that the market could see, especially if we get a continuation of those near term charts. I'm just talking like looking 5 days out. We get multiple updates a day for that. And what you and I were talking about, I don't remember if it was last year or the year before. I mean, we were kind of looking at those chart changes about every time they came out, especially that 11
every 6
o'clock
hours,
one.
like every 6 hours. Like
Yeah. And so, I mean, if those start to show just a continuation of, less than normal, I guess you can call precipitation, for those major areas, then we can maybe start to have a little bit of a weather story pop back in.
Yeah, it's boring so far this year as far as the weather storing. I mean, it's just been a non-factor. I'm not saying that something can't crop up here eventually. Especially that late July, August timeframe. I'm not saying it can't, because it definitely could. And you're gonna start hearing everybody talk about, obviously that potential of, the pollination weather window and grain fill on beans, and or we're shallow rooted. So even just, a mild decrease in rain can hold back yield. You're gonna hear all that. And I mean, I see that I see that potential for the most part. I just don't know right now. The market is really, it's really worried about it.
Especially global weather too.
Yeah, global weather. For the most part, it's the southern hemisphere's looking pretty good, right? I mean, the Brazilian crop really isn't getting any smaller. I guess there could be a little bit of some potential issues with some Australian wheat emergence, possibly. But man, that crop's got a long way to go, and they got a long winter to go down there, and we all know wheat's a tough crop, so I don't think there's too many alarms getting set off for that one quite yet. So
Yeah, even look at that Russian crop and a lot of the rain that they've seen recently too. Eric and I were just talking about that this morning as well, is that it really seems like there were some big crop scares. That I don't know if it was people that were just heavily bullish or what, that really wanted to, maybe have a weather story for wheat in the Black Sea. And that was a little bit of a concern with some drier weather that they had this winter when there was the dormancy. But really, since that wheat emerged from dormancy, there really hasn't been too much of an issue. And if anything, those crop estimates have been getting bigger.
yeah, they've been getting bigger, especially on the government side. So um, proteins, livestock. Uh, we had hogs and pigs last week, and the market, as usual, was a little bit over optimistic on what could be printed there. What was your thoughts on hogs and pigs?
Yeah, so the Hogs and Pigs report last week, we didn't really get a chance to dive into this one, but we did do a write-up on it still. But yeah, definitely, in my opinion, tilted on the bearish side of things. You can almost call it neutral. Can't really say as of right now it's too supportive. Basically, I mean, the total pig inventory came in higher than expected, kind of showing that there has been allegedly a good amount of pigs moving through the pipeline. That kind of shows with the slaughter rates that we have seen that yes, there are pigs going in and out, but and a lot of that has had to do with our breeding herd. Now, our breeding herd has been declining for a little bit of time, and then but what they've been coming back with is that those pigs per litter rates have just continually gotten larger. It kind of seems like overall we're starting to see a little bit of a plateau, but you made a joke of like before that report came out or as it was coming out that um asking if that pigs per litter rate came in at like 17, just to kind of having a little bit of an exaggeration. But I mean, just the way that it's been trending, it just kind of seems like that way, that any offset that we've had or any reduction that we've had in the breeding herd has come with the offset of higher pigs per litter that have just been a testament to our farrowing efficiencies.
Yeah, I mean, I just know what I know from talking to producers every day. Not what's printed in a government report, and I just know PERS has been beating the crap out of guys. I know some guys have been having trouble, filling up their barns, having trouble getting piglets, um, and a fair amount of guys with some with their local buyers, trying to source some pigs and kind of pulling them forward just a little bit. So that's what I know. I do know we've been a little bit low on the inventory side here domestically. Had a fantastic week of export sales. I think it was last week. It was second highest of the marketing year. So there's a potential story, at least here in the short term, that Hogs can kind of fight some seasonality here and stay supported and maybe even get another little boost higher if we're lucky. But um, in the longer term, I mean, there could be a longer term story here eventually too. So
Yeah, I mean, is that got to be on the export side of things, namely because I mean, our export demand, as you said, like our sales in the last data report were phenomenal. A lot of that had to do with Mexico, China came back in, the government reports too. I mean, we've been seeing monthly reports showing that our total pork inventories have remained pretty low despite, slaughter rates being doing all right. We're down year over year. But we've tried to offset a little bit of that maybe with higher weights at some points in the year, but really have just been unable to do that. And I mean, it just shows that, there's still demand out there. So we're pretty much going to have to continue driving that demand.
yeah, for sure. So, all stuff we're kind of keeping an eye on here. Anything else
No,
on your mind?
no. Let's talk about cattle.
Oh,
Are
cattle,
we
yeah.
are we at a top yet?
Cattle, I'll be the first to admit, I think starting at the end of May, uh, up until basically last week, I didn't like the price action at all. Um, and the potential there was, for some sort of topping pattern, consolidation type pattern. That potential, I guess, is technically still there. It's just, after last week, was capped off by Friday with a very strong day of trade. It really looks like a resumption of the trend. We had some follow through buying today, and I like to see it. So to me, all signs look strong, and we'll look to at least go test old highs, I would assume.
I was to say, are we still looking at a lot of headline driven trade, especially with, recent stuff popping up?
I mean, I personally don't think it's headline driven. You had June fats go off today at a little over 225, and so being an inverted market, you got to think August tries to climb up there and touch that at least. So there's a decent little target. And I mean, there was an interesting headline this morning on Bloomberg. In France, some lumpy skin disease popped up. And it's not the first time there in Europe here in the recent past that this has popped up. So another disease that the cattle market gets to try to keep an eye on and combat.
Yeah, definitely, definitely not short of diseases in the U.S. or not only in the U.S. but abroad that is on top of mind for a lot of producers, a lot of industry advocates that want to make sure that their producers are informed as well. So I mean, it just seems like yeah, there's another thing that we got to keep our eyes on.
Well, I would say to put a bow on this, cattle market, that seems supportive and strong and potentially a resumption of the uptrend there. And I would say that for the June 30th report, not nearly as life altering as it could have been. Um, and and really, you know, weather is obviously you got kind of one final straw there, or one final card to play in the weather deck, and that's pollination time period for both for corn and grain fill time period for beans, and really other than that, watching macros, right? You're watching how these trade deals, well, either they unfold or don't here over the next week. We've got the pauses supposed to come off on the 9th. And so you got the tariff issues, and then obviously the tax and spending bill that I think the market's watching that like a hawk to see what the potential there is. Is that inflationary, which is time to buy commodities, or is there just more indecision and chopping around in Washington. So I think that's the kind of stuff the market's watching, besides weather. And that's about all I got. Dawson,
Yeah, I mean, if you're ever wanting to get a little bit more of a in-depth view, look at these report numbers that came out, feel free to check that out in the app. We definitely have the numbers for the acreage report, the quarterly grain stocks report for corn, beans, wheat. I know we didn't really hit on cotton, but we got a little bit of a write-up on cotton as well as looking at that quarterly hogs and pigs report.
all right, Dawson, we'll check you out probably sometime next week.
All right, well, that will do it for this time. Thanks for taking the reins on this, Nick. But I'm Dawson Schmidt.
I'm Nick Lawrence.
And this has been a Commodity Chat from Trader PhD.
Past performance is not indicative of future results. Futures trading involves substantial risk and is not suitable for all investors.